we look at the business cycle using the ISM survey, it's below 50, which means the manufacturing is still contracting. Even if it went up every single month for 9 months, it's still September next year before you get somewhere near a peak in the business cycle. And crypto tends to that tends to be a rolling top, and crypto tends to have a rolling top around that.
We are in an extremely important and exciting period in the ongoing cryptocurrency bull market. The banana zone, Real Vision CEO Raoul Pal's perfectly coined term for this point of the bull market, and what's to come is in full swing, and spirits are high among market participants. Bitcoin, the largest cryptocurrency by market cap, is currently trading above $100,000 with expectations of so much more to come. In 2025, in a recent discussion with the New Era Finance podcast, Pal, a renowned macro analyst and former Goldman Sachs executive, outlines important dates to watch out for in 2025, particularly periods during which he feels there will be extreme market volatility in 2012. Pal also addresses the widely debated issue of when the cycle will peak in 2024. There has been much speculation about this, and various analysts have compared this cycle to previous cycles to estimate when prices will peak before we begin the inevitable transition to crypto winter. Some believe we will have an early peak around mid-next year, while others like Powell suggest the peak will come much later. During his interview, the renowned macro analyst also discusses the intersection between macro and crypto and how we can expect this intersection to hurry things along or slow them down in 2025.
The issue is people have this anchoring bias on price. So they think 100 is more expensive than 1. But in this weird world of crypto, everything's fractionizable. So you just should be thinking about what are the percentage potential returns going forwards. So let's say Bitcoin usually does about a 3x from the previous high, maybe more, depending where you are in the cycle. So you should be thinking about that return as opposed to the price, because anybody can put 10% of their investments in or 10% of their wages in, whatever. It's a fractionizable asset. So don't look at the number, look at what you can buy of it and the percentage potential returns. So many people anchor on things that are super cheap because they think, well, one day it could be the value of Bitcoin and therefore I'm going to make a million X returns. The world doesn't work that way. Bitcoin is really the anchoring for the whole space. And over time, right, this space is a $3 trillion asset class today. If I extrapolate the trend rate of growth of adoption or price or market cap, you get to somewhere like 100 trillion by 2034, 10 years. So we're only 3% of that journey. So is it expensive or not expensive? It's probably very cheap. And at every point, and I've been around this cycle, I've been in crypto since 2013, everybody thinks, oh my God, I'm paying the high. And when you look back, when I paid the highs at 200 back in, well, it actually went up to 1,000 and went back down again. Back in 2013, I'm like, I paid the highs. And then I look back now and it's 100,000. That's the thing about exponentiality. People don't understand. They see the cyclicality, but they don't understand the secular exponential trend.
How long can it still go up as fast as it went? Like at some point you've got the exponential curve and your yields will just go down along with it, right? Because markets expand, markets keep on expanding.
Yes, so for Bitcoin, that will become a very real thing earlier. Mm-hmm. But for the entire space, if it's going to 100 trillion and it's only 3 trillion today, will Bitcoin dominance be 50% of a 100 trillion market? No. Where will it be? Where will it settle as an asset class? We don't know. But let's say it'll have the equivalent or larger than gold whenever gold is at that stage. So let's say it's 30 trillion. So there's the 70% that's going to make an extraordinary amount of money. I think the S-curve applies to the whole space overall, but the returns are still relatively high to come because we're still pretty early in most of this. And we see that over time. So Bitcoin's returns are coming down. ETH was higher, still is higher, but it's coming down. Solana's higher, but will come down next cycle. Sui or whatever's coming up this cycle, it will still have a couple of acceleration cycles, then it slows down. But what are we going to argue about? That the returns have gone from 150% a year to 60% a year? I mean, this is la-la land in finance, right? Nobody gets given these opportunities. What is a harder thing is why even start a business? Because I don't know almost any business that consistently generates between 50 and 150% a year returns, and you actually don't need to do anything. You just need some capital.
Pal often describes the cryptocurrency and digital asset space as the biggest macro opportunity because he sees it as a transformative force in global finance and technology, akin to the internet's early days. But with even broader implications, he emphasizes its exponential growth, potential driven by network effects as more people, institutions, and developers adopt it. This rapid adoption is creating entirely new financial ecosystems, from decentralized finance to tokenized assets, which he believes could disrupt traditional industries. Pal also highlights how macroeconomic conditions, such as rising debt levels, inflationary pressures, and low interest rates, make crypto an attractive alternative to fiat currencies and traditional financial systems. Bitcoin, for instance, serves as a hedge against inflation and currency debasement, while Ethereum powers the development of Web3 smart contracts and decentralized applications, offering the infrastructure for a digital revolution. He believes the cryptocurrency market is soon going to be a $100 trillion market, the fastest growth for any asset class in history. To avoid missing out on this grand opportunity, Pal says to pay attention to some important dates in 2025 and beyond.
Ask most people who were in last cycle, and that was their first cycle, they have tremendous PTSD. Because they looked back on the 2017 cycle, and 2017, the market peaked in March before tax season. It then corrected, so it peaked at 2000. It then kind of corrected, and then it went up. It went up 10x in 4 months.
You had the China correction in between as well.
So last time, I also thought, okay, we saw the tax season correction, then the rally back up. It was a big correction, down 50.
Mm-hmm.
Then it shot up, and it's like, okay, it's going to be 2017 again. And it wasn't, because the central banks would start to withdraw liquidity, and the business cycle had been brought forward by the massive liquidity was starting to come away, and that was the end of that. So this time, when you go on X and you see people, they are so PTSD'd by that I think that many will sell tax season March and then get trapped out.
Mm-hmm.
And then they'll expect an early peak, and maybe it does peak. From my liquidity work, it still suggests that it peaks at the end of the year, towards the end of the year. But it depends what happens to liquidity. But if that is the case, I just think the risks are here. And then the risk is 2026 is the people who then sold out, maybe they screwed it up, and maybe they got out like I did in 2017 way too early. You then try and buy it back, and you end up buying back at much higher prices, which is what happened to me. I ended up buying back in COVID in that crash, and I got in at 6,500, but I'd sold out at 2,000. And I'd done the job. I sold out into strength and bought into weakness. Difference was, in a secular exponential uptrend, the difference between that peak and that trough was like this.
But is the macroeconomic framework going to push Bitcoin and crypto further ahead this time than in the previous cycles?
We can't tell, because liquidity is actually the dominant factor.
Mm-hmm.
So right now, we look at the business cycle using the ISM survey. It's below 50, which means the manufacturing is still contracting. So, okay, we're nowhere near tightening financial conditions. They did tighten because the dollar went up and rates went up, but the Federal Reserve and the governments need to change that because we need liquidity in the system. So even if it went up every single month for 9 months, it's still September next year before you get somewhere near a peak in the business cycle. And crypto tends to kind of that tends to be a rolling top, and crypto tends to have a rolling top around that. So I think it's longer than people imagine. So it's later in the year, because people are so scarred by last time around again. And if I look at it on a probabilistic basis, when we took off so aggressively in 2023, I'm like, okay, look, there is a chance that we front load the cycle. But then we had a 8-month correction, and that kind of put it back on track. And so therefore, I think we've got two odds now is, does this look like a more normal cycle? What that means, I don't even know anymore, but let's say 250,000 Bitcoin.
Mm-hmm.
Or do we get something like 2017 and 2013, which is something a bit wilder? And I think the probability has gone up for me of that. But, I don't make predictions on this stuff because it's pointless and you just get trolled on the internet for making predictions. But probabilistically speaking, from what I know today and what I know about liquidity and the regulations and everything else, the probability is that we're going to get a more violent upside cycle with lots of volatility in the middle. Like, liquidity has been falling for 2 months now, 3 months. It's fallen quite sharply. And that's whether you use Global M2 or whether you use our Global Liquidity Index, total liquidity, that we produce at Global Macro Investor. It maps really well on Bitcoin. Now, these correlations don't last forever in a perfect form, but it's been perfect. And it would suggest that the market peaks sometime December, end of the year, early Jan, and sharply corrects, which is exactly what happened last time Trump came in.
In related news, Pal is looking forward to altcoin season, the next phase of the banana zone, when altcoins like Ethereum, Solana, and others will break out and begin to outperform Bitcoin. Pal says this moment is almost upon us, and when it begins, he expects SUIE to outperform the rest of the market. Here is a recent tweet from the Real Vision CEO SUIE Solana. Nice clean break, SUIE should outperform. For the rest of the bull market, I own both and think both are fantastic in different ways. Solana is lower risk. Do you share Pal's optimism about altcoins like Ethereum, Solana, and SOI? What other cryptocurrency do you think will outperform brilliantly next year? Don't forget to like and subscribe, and let's keep this bull run going.